Good morning, everyone. I'm Bagger Don at Stock Market Caddy, and today is Saturday, November 16th at about 9:15. Now, the markets have been kind of wild, haven't they? A wild rally after the election, a pullback the last few days. What's going on, and how, as traders, do we trade this? I'm going to show you what I like to show almost every Saturday morning, a view of SMC Swing Machine Plus. This is a trading tool, an advanced trading tool. And let me show you what's been happening. I'm going to keep the date here. We all know the election was on the 5th, right? Let's save the VIX for a moment. Let's go to the ESZ. This is the S&P futures contract on a daily interval. Swing Machine on a daily interval went long 48 days ago. Not on November 5th. No, it went on September 11th at 5 p.m. It is up, the signal, that is up 4.96%. If you had, and that's the difference between the entry price and where it closed on Friday. Now, if you had used a futures contract, you're up much more than 4.96% because a futures contract is leveraged. If you had used a call option or a put credit spread, you would be up, significantly more than just 4.96%. But that's where that percentage return is. So I just wanted to explain that. Now we'll come back and look at the hourly in a moment. Let's stay on the daily. The NQ long 44 days ago, 16,000, September 17th. The Dow 66 days ago, $12,000 back on August 15th. The Russell 45 days ago. I would say somebody knew something at that point, right? Probably knew the outcome of the election, maybe. September 16th. Gold short 3 days ago, 1640. Oil short 5 days ago, 1,000. Now Bitcoin, this is a huge contract, futures contract. It represents 5 Bitcoins. But the signal was 26 days ago. Yes, $140,000, huge leverage. But the entry price was $63,930, a 44% hit because it's trading at 92,000. And of course, there's a lot more trend information that we don't have time to comment on today. But I wanted to show you this. Now, the VIX on a daily basis went short 8 days ago. Now, the VIX is a reflection of the options market, so it's going to be a lot more active, and it's where we take a lot of our cues from. So we'll save that for another day. Well, in fact, let's drop down to the 60-minute now. And as a trader, you need to decide what interval. There's a lot of things you need to decide because we can't control the market. We can only control what we do. What markets are you going to trade? What interval are you going to trade? What products are you going to use? Are you going to use futures? Going to use options? You're going to use a combination thereof? On a 60-minute interval, 18 hours ago, our members got warned that the markets were getting defensive. And you can see here on the S&P 60-minute, 31 hours ago, it went short. What type of trade is that? It is a counter trade to the daily long. Now, maybe you were long. Maybe you wanted to stay long. If you got a short signal, you could have used micros to get short, and you could have hedged your profits. Maybe you weren't long. Maybe you just wanted to trade the 1 hour. And if you did 31 hours ago, this week on the 14th, you'd be up 5,000. So those are some of the decisions and considerations that as a trader, you'll need to make and to work through. We're here to help you think through that type of strategy, that sort of approach. We're happy to do it. Look at the NASDAQ 45 hours ago, $12,000, 13,000 really, in profits for the aggressive trader. For the person who went long, had they hedged themselves, they could have saved quite a bit of their profits, because the likelihood is the daily signal is going to continue probably into next week. I wouldn't be surprised. The Dow on an hourly 2,400, the Russell 4,900, gold 13,000 on the hour. So what happened here would have been 120 hours ago, it would have been a counter trend to the daily long. But ultimately, the daily gave it up, and the counter trend became the trend. Oil, same thing. And then Bitcoin, 26 days ago, huge trade. The 60-minute would have gone short and then gone back long, so you wouldn't double up on the long position. We're using the 1 hour either to trade aggressively or to hedge in this example. Of course, you might want to choose different markets. You might want to choose even smaller time frames. You might even want to trade micros. That would be up to you. I am Bagger Don at Stock Market Caddy. If you want to learn how we like to approach the markets, what products we have built, and they are products, they're proprietary tools. There's nearly 65 to 70 of them. During the Q School, we'll try to peel back the onion, so to speak, and show you most of them, if not all of them, and give you an opportunity to work with them so that you get a chance to see what this is all about. Is this something that you want to do? If you have a passion for this, I do think that a person needs to have a passion. Trading should be fun. It should be a source of satisfaction, a challenge, and a good feelings about it. If it's a source of aggravation, a source of frustration, it may not be for you, and that's okay. But if you have a passion for this and you have the discipline, the patience, the tenacity, and that this is something you want to do, we're happy to work with you. Be sure to visit stockmarketcaddy.com. Watch the videos there. Jot down your questions. You can email us your questions. And yes, you can call me any day, including weekends, including Sundays, holidays. If you have an interest in the markets and you have questions about Stock Market Caddy, if you call me between the hours of 9 a.m. and 9 p.m. and I'm not on the phone, I'm going to happily take your phone call and happy to chat with you. If I am on a phone, on another call, just let me know when it's best to call you back. Give me a couple of dates or times, and I'll be sure to do that. 813-758-8263. You see, folks, we do have a passion. I love doing this, and I love teaching folks how to do this. I hope to chat with you. Have a great rest of the weekend. Have a great trading week. And the volatility in the markets is going to be phenomenal for years to come. Thanks.